This is the latest version of my time series forecast and analysis charts for SPX that I'm calling the SPX Weekly Options Blueprint. With SPX going to 5 expirations per week, this blueprint is going to help us time the market trading high probability trades in a systematic way without having to watch the market all day. We're going to know what we're doing before the trading week starts. Here's how it works. There are 2 charts here. 5-minute charts for each day of the week. These are best used for same day expiration or 0 DTE, and we'll do an example here in a minute. And then we have 30-minute charts at the bottom that spans the entire week, and this is great for 1 to 2 day trades. And for those that have PDT issues, that's the one you're going to want to focus on. And what these charts are showing are specific times of the week and day where the market is likely to peak and potentially reverse based on recent price action data. Each week, the chart is going to change slightly as the data is updated from the recent price action. But the chart we're looking at right now is the SPX Weekly Options Blueprint for the week of February 28th, 2022. These charts are looking at recent price action data and displaying a forecast of this week for us to base our trades off of. Now let's talk through how to use this chart to make several profitable trades that week. And let's go ahead and start with the 30-minute chart. The 30-minute chart is showing cumulative price changes in SPX by points over the course of the week, and this is going to help us identify if there are any short-term trends or even neutral areas where we could craft options trades around it. And when we're looking at this chart, we can see that in the recent price action before the week of the 28th, we're looking at Monday finding a bottom in the early afternoon and a slight bullish bias into Wednesday. So what we're going to do is look at trading a put credit spread slightly out of the money on Monday afternoon that expires on Wednesday. Remember, at the time of this particular week, there weren't 5 days of expiration. So if we're looking to take a trade on Monday, we're going to have to go out 2 days instead of just 1 day. And that's going to be changing, of course. But let's go ahead and look at a trade based on this, taking a put credit spread around 1:30. That's where the low was in the early afternoon, expiring on Wednesday. So I've got this trade set up in OptionOmega, just a generic example. We're looking at the week of February 28th to March 4th, and we are selling a put credit spread. I'm just choosing something slightly out of the money where the short strike, we're selling the put at a delta 40. That's usually let's call it 2-3 strikes out of the money with 2 days expiration, and we're buying a put 5 points lower, creating a 5-wide credit spread. And we're going to open that trade at 1:30 on that Monday. We're just doing the one trade for the week because the market's going to change a little bit each week. And we are allocating 10% of a $10,000 portfolio. So we're only going to risk $1,000 on this particular trade. And we can see in the trade log below, it opened the trade at 1:30 p.m. We got a credit of about $1.60. It traded 2 contracts because if you think about what the max loss is, in this case, the max loss would be $3.40 per spread. So it's only going to take 2 spreads because it's going to keep us under that $1,000 mark. And we can talk more about position sizing in another video. But in general, this is how we're setting this up. And this one expired worthless. Now we could put a 50% max profit or something like that on there, but I'm just kind of showing an example about how accurate this blueprint is. So that was the first trade of the week. Let's go back to the blueprint and set up another one. So for the next trade, what the blueprint is telling us is that the market tends to peak around Wednesday and then sort of tapers off into the end of the week. We can see Thursday and Friday are pretty bearish. So we're going to look at taking a bear call spread around noon on Wednesday that expires that Friday. Remember, would be 2 days to expiration. So we're back in OptionOmega, and I have the bear call spread set up already. Again, we're taking this trade at noon on Wednesday because that's what the blueprint was telling us, that the market tended to get bearish over the rest of the week. And we are selling a call spread where the short strike is around a delta 40, and we're buying a strike 5 points higher. If we look at the trade log below, we can see that the trade was opened at noon. We took 3 contracts because the credit was $2.20. That allowed us to open 3 contracts, and we're still under our $1,000 risk premium that we're holding. And this one expired worthless as well. Again, I typically would take profits a little bit earlier, but I just wanted to again show you the accuracy of the blueprint. Now, the weekly options blueprint has already given us 2 winning trades for this week using the 30-minute chart. Now let's look at the 5-minute chart for trading 0 DTE or same day expiration options. And real quick, if you want me to send you the updated weekly options blueprint each week before the market opens, check the description of this video on YouTube for details, and I'll put all the information in there. So let's look at the 5-minute chart on Monday. And the first thing we'll notice is that there's hardly any movement. It's very little movement up and down. We're somewhere in the range of 15 to 20 points. So what that's telling me is that there's not a lot of movement on Monday. We want to look at something that is delta neutral. We don't really want to pick a side. So let's backtest an Iron Condor for that particular day. So I've set up an Iron Condor for that particular Monday. We're going to open this trade at 9:45, and I just chose the short strikes at delta 16 on both sides, and this is a 10-point wide Iron Condor for the wings. And we can see that we had a nice win. We opened the trade at 9:45. We received a $3 credit, and I went ahead and put a 50% max profit target take, and we got that at 12:11. So about, let's call it 3 hours later, maybe 2-3 hours later, and we were able to book 50% of the max profit. And again, because the blueprint was telling us there's not a lot of movement, those are the days that we want to consider some kind of delta neutral / Iron Condor. We can really suck some of that premium out in the morning. Now let's do one more example of 0 DTE, and we'll head back over to the blueprint. So let's take a look at Wednesday for a potential 0 DTE trade. We can see first of all that Wednesday tends to be bearish because the blueprint has the histogram below the 0 line, and we get a little bit of a rally up until the noon hour around lunchtime, and then it really kind of just stays bearish the rest of the day. So let's take a trade at noon on Wednesday, a bear call spread, and let's see how that turns out. All right, I have the bear call spread set up for that particular Wednesday. We're going to take that trade at noon, same day expiration or 0 DTE. We're going to sell a call that's delta 40. That's a little bit out of the money, maybe 2 or 3 strikes, and we're buying a call that's 5 higher, giving us a credit spread. In this trade, we took the trade at noon. We got a $2 credit. Looking at the trade log here, we ended up taking 3 contracts that kept us under the $1,000 risk, because remember, the max loss if you get a $2 credit is $3. So you can trade 3 of them, and you're risking $900, which is under that $1,000 allotment that we're sticking with right now. In this case, I just let it go to expiration, and it actually expired worthless. So this particular trade, you're able to book $600 on risking about $900. So again, the blueprint super accurate for picking turning points, for trading both sides and trading delta neutral. And again, if you want me to send you the updated SPX Weekly Options Blueprint each week before the market opens so that you can plan some trades and not have to watch the market all day, check the description of this video on YouTube, and I'll see you in the next one.